Okay, so the scripts in this video I just uploaded, and I wanted to run through um, the kind of well, the aspects of the script. The fact that the script has an expiration time is the critical thing, and I'm trying to replicate the expiration by here. I have buy limits that last. So this first one is a buy limit that lasts 15 minutes. This one, and this is 15-minute playback of the market. I'm just using Strategy Tester to play back the order limits here. Now this one at the bottom, this first one's a 15-minute script, and the next one's a half hour. I'm trying to represent time going past, and the bottom one would be a. This is like a 1 hour order. And this is a 2 hour order. So if I shift the screen over, I'd have to let me go to cursor mode here. If I shift the screen, I guess I'm not gonna be able to do that. Yikes. Okay, let me start over. I kind of have to see the future. So imagine I just got filled on, like I press a button, and I think right here I would, like if I was just going to buy at the round number, and I got trapped here, right? Now where's the stop on that? Is that stop? Like how do you perceive the market? Is your first ticket going to be like this with a stop here? Well, if it is, then you're out. If it's going to be like this, and this is about a 20 pip stop, then you're saying, I think this thing's going up, and I'm just going to probe the market, and I'm going to take all this risk on, but if this is a 1K, then this is going to cost you $5 to find out if you're right. Now, that may not be, and if your target is going to be here, so this is your stop connected to this, and this is your target. And you bought on a limit, or maybe even got trapped on a stop, but I would think that your stop entries would be more trend orientated. So if you had a buy stop here, that you would have a pretty tight stop on that. Maybe 11 pips, and I'm running a 2 pips spread on playback here, a fixed 2 pip spread to represent a bad fill. And now it would be cool if you could write a script, and I don't know if anybody knows how to code this, where inside one script are 3 different time frames. Because ideally, this order would pen for 15 minutes, say, if you just threw it out there. You may not, like, you're not going to win every trade, so maybe this one. And that's going to expire in 15 minutes. The next one inside the same button press is going to expire in a half hour, and then it's going to be an hour, then it's going to be 2 hours. That may not be. So if this is 15 minutes, the width of that candle is 15 minutes, this is like a half hour script. And so you want the big picture is the trends up, and you're really trying to buy this psycho plunge, so to speak. And that is your raison d'etre, reason for being. And this technique of buying on limits is a little bit, I don't want to say dangerous, but like when the euro collapsed, like, this is why you can actually trade both people's trade plans at the same time. Say that you put on a hedge because you're not sure if the market's going to keep tanking. Now, I think that the buy stop, sell stop, when the markets are just, you're not sure what it's doing, you put on a hedge. And if it's a small range, on the time frame you're on, you press that button, it's a hedge. Now, this may be psychologically disturbing that you're making money without just choosing the direction. At the same time that you're making money in the hedge, so today I was selling, I normally don't sell, but I put a hedge on. And I'm already in the trade, and I'm thinking, well, this is kind of great because realizing when it's time to get out of some of that hedge and just waiting another 15 minutes for the hedge to make money. This is why it's inconceivable that you can make money and not know where the fucking market's going, because you don't have to decide that. The market could decide that for you. In fact, the market's going to decide for you whether you choose to be stopped out with a certain pip risk. 8.5 pip stop. Now you can put in, it's inconceivable, but you can put in half pip. Now I don't have limit grids like that, so if you dropped a limit grid in a pocket, put a 25K in there, you have to kind of hand place it, and a little bit of art to it. You'd have to like compress it in there. Now, when you overtrade anything, like the other demo, somebody asked me, it's so cute because FX Book will republish the new demo, and it'll come out, it'll be like a whole new balance, and people are like, did you? The funniest thing was when I blew up this big demo, the guy asked me if I did a withdrawal. That was adorable. Did you do a withdrawal? I noticed the demo changed value. And so here you're kind of rehearsing what to do. And now also, imagine you've got a matrix of orders in here. So you have some that linger for, I'm jumping in topics, going back to limit entry now, which is a whole different way to trade. But my point being is that before this plunge, the market went sideways. So you could have put the hedge button. You could have pressed the hedge button on the 15 because you had the right to do it. Right? You had the rule set to let you do that trade. And you can also, since I'm drawing on top of the screen, you can imagine that you would have got stopped out of this configuration of a script. And forget about the time frame. You would either put in hand placed, but the deeper you go, you want that script to last longer. Because imagine this didn't happen in 15 minutes. Imagine this is, because it doesn't have to spike down 20 pips in 15 minutes. Probably news came out, or they filled a vacuum hole. And now it's retraced back up, and now it may go all the way back, retest and plunge through. So the market is capable of any fucking thing. But every 15 minutes that goes by, there is literally a trade plan on this chart. Now, I can't say with a 2-pip spread you should be trading to take advantage of this 15-minute time frame in such a hedge way that you're not going to make any money. So when the market's in this thing walking down, okay, you know what? You're not killing it. You're not blowing the account up, but do you really want to? Maybe you do. When the market gets violent, and I had a Forex dashboard running at one time that I used to use as a volatility alarm. So it went beep, 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 and I actually should put it back online here because amazingly it goes off at the top, bottom of the hour and 15 minutes. Because look at that hammer on the 15. It's a clean spike, come back, boom. So the market's capable of vicious spikes in either direction for no apparent reason. You could also trade this non-directionally with limits. The market's going sideways. You get into a hedge. Now this is, with good ratios, it's not going to fucking matter. The market goes sideways. You put on a hedge and you have limits placed, and there's enough money in the account. You got always to go with that, enough money in the account. And it does the same. Now here you could relaunch the same limit grid you just filled on. You're going to rebuy this, and also, let's consider the exits. That's why you're going to need more than a 3K to trade. You may trade an 80K. Now imagine you have another script overlaying that looks like this, and the exits, where do you get out? Now, if you want to do a group exit at the entrance point, so if this is let's imagine a hard stop for argument's sake. The stop for this ticket is combined, or it's soft, it's in here. The stop for this one's connected to here. The stop for that's connected to here. Now imagine this in a scenario, right? Where's the exit? Now, if you did a group exit the way you did a group, like a hard stop, a hard exit's going to look like this, and you can write, these are hard-coded scripts. This would be a hard-coded script because you really have to. If you hand place this, that's a lot of work because you have to think, oh, I got to put a 4-hour down here, I got a 2-hour here. Or you hit a button that lays the 15-minute version. So you had the 15-minute version, and you had another button that starts to only come in. It filters out very close to the market. So the closer you are to the market, the shorter your script expiration is. Because you don't want to get involved too heavily. If the market shears down, you don't want to buy, you don't want to expose yourself to buying every 5 pip handle. You might buy this on a 15-minute basis with a kind of hard stop there. Wait, in other words, the stops that represent every entry might look like this. And you press a button, and for 15 minutes, this thing's sitting there. Now, the half-hour version has to look like this, because it's too much exposure. And the stop could be like that, say. Or maybe the stop's going to be, but this is hard-coded. These are not the limit drops, because the limit drops have fixed stops for every entry. You cannot design. Though this is all hard-coded scripts I'm talking about here. You have to write, these are custom. And you know when it's appropriate to hit that button, and you just have to know. Well, I'm hitting a 15-minute 40 pip deep. Boom. And you're just going to double-click that. I don't think you want to assign a hotkey, because you need to describe the script to yourself. That's 15 minutes, 40 pips deep drop. Now, if you were running a prop house, you'd yell out, drop the 15s, 150 pips deep, everybody, boom. And so today what I was doing in the live room was just having fun. People are saying, it was so funny because the guy goes, shouldn't you think about selling? I go, yeah, I should. So, so when I talk about trading, I'm jamming. I'm just playing my guitar. I'm not playing a song. I'm just dicking around. People say, well, like if you're making money, right, you're very focused and stuff like that. And if I was really going to do it and go, okay, this is how you trade. But it's not how I'm really trading, because I can't pull the trigger on the demo and pull the trigger on my other account. And I would never trade so ridiculously as I trade in a live video. I think people misunderstand that when you're jamming on the guitar, you're not playing a song, you're not playing a strict scale, you're just noodling. And with the ability to drop so many fucking orders, I just can't resist. And it gives you an idea of how you would really want to do that. And you start to take bits and pieces out of your imagination and run that. The other thing is that as the market double spikes into this, you got to hit that button again. So you're kind of refreshing all these orders, because once they fill and kill, and this one exits here, I forgot to complete the hard exit. So hard exit, hard stop looks like this. You're buying limits, say, linearly placed. And now this script here, imagine it lasts for 15 minutes. It's going to have to look more like this. It really needs to look like, but I'm painting these scenarios in my head when I know when I hit the button, what I have in front of me, and how long does it last. So imagine these orders are going to last a long time, because I got enough money in the account. I built up the account, and I can trade super aggressive now. Every 5 pips, I have a limit. And it lasts for an hour, or maybe an hour and a half, maybe 2 hours. Can't do an hour and a half. And so I'm actually committed to buy like 6K here, I think. I'd have to call that 6K. Looks like 6K to me. And every 5 pips. But after, and let's also imagine that we're going to have a different, instead of a hard stop, we're going to have a more soft stop. And I didn't resize the screen, but imagine your stops are like this. And now these are going to be more scalp orientated, the exits. So if this, and of course, not to mention, this is another thing. And as far as first in, first out, I don't even know. I cannot really even think about having to worry about that. But I think if you arrange the stops and connect them to these limits properly, that you would have a first in, first out forced scenario. But it's so complicated. I'd have to take the day off, go somewhere in the park, and think about, should I connect this stop to this limit or this limit? Would that create a first in, first out situation? I think I'd literally have to have the stop connected to this guy, and the arrays would have to be, so you hard code all this stuff. Because at some point you're going to need to, you can drop the scripts, but if you find that you keep dropping the same stupid ass grid capture, and you know the total risk of ruin per script, you don't want to drag all that shit out and drop it. You're going to hard code this. Plus, you can't, with the grid drops that I was doing, they're kind of tough because you cannot create a custom compressed soft stop down here. You can't create elaborate scenarios like this. Now, if the ratio, and plus you can have like ratios like, say this is the stop for this ticket, and then the cash out for this one is going to be a pretty decent ratio that ends up in here somewhere. And so if all of these guys, but like I was saying, you could actually have it interlaced, so this is bizarrely enough connected here, and this one isn't connected to the one above. This one's connected to, say, this thing, and the target for this is some wackadoodle thing here. Now, the original scripts I wrote one called Super Ball, which was actually designed, a swing trade that you did not look at this script, right? You dropped it. And back when I was super excited about this, I was blowing up real money accounts. I actually traded better manually because I was forced to go, you know what, I'm getting this fucking trade here. Now look how the market's going back, and I didn't know what was going to happen here, but look how the market, it spiked down, and it now drifts down to the same fucking price. Now this really fucks people's heads up. I know it does mine, because I'm like, well, wait a minute. You guys had it down here, you didn't like it, but now you like it, and we might even take out this. But to the line chart trend view, that wick never happened. For your limit grid, it sure fucking did. And now it's dipping down again, and you've reloaded the gun, because if you saw this happen, you know that that gun's been shot and gone. This trade's been played out. When it comes up here, and this is the 15-minute, and if it pauses, as soon as they have a small head, right, you have a hammer. And as soon as it goes sideways, on the 5-minute chart, or the 7-minute chart, or the 10-minute chart, you've got a small bar. Time to put on a hedge. And actually, after the market does a violent move and goes sideways, that's when it's scary for the bulls and the bears, because they're like, okay, is that going to keep going, or are we just going to drip down now? So it dripped down, and I'm pulling back the market at a pretty high speed here so I can rehearse the scenarios. Now, notice if you did put a hand-placed limit, not to say you can't put a hand-placed limit here, but if you just throw a fucking grid out there, you're kind of going to get filled. And besides, if you put a hand-placed limit on the bottom of these wicks, this is not a you could put a hand-placed limit on the top to sell. Hand-placed limits really don't work out on buys. Well, it's hard to tell. Now, with a fixed pip broker, you know you got to get your buy limit in here, because the asks never, we only have bid prices on the screen, so you know you wouldn't got filled. So you would have got filled when you see this ask line. This would have filled. This, when the ask line goes below that blue line, you know you would have got filled on that. But there's literally a bottomless pit of expression in these markets with these scripts. Now, I've been running a lot of stop entries and trying to get into you could build a hedge too with stops. Like you could literally say, why people say literally, but I guess it's to say very explicitly you could do this. So imagine this situation, and I'm going to use my green for my stop entry. And of course, let's imagine that this is like a half-hour chart. I can't change the chart we're playing back the speed on. But if you have a 15-minute script, which you can write, and you hit it every 5 minutes, that means you've got a stacked up. If you're going to buy every 2 pips, you've got a buy limit script here that's going to go super deep, and it's going to have a hard stop. Let's just connect this hard stop so we can do easy math and figure out if there's a stop hard written to these that script's going to look like this, and the take profit could be anywhere from, well, this top one has to be better than break even. Needs to be a swing trade up here, right? If this is your stop, and now you have to terrace these out with better ratios. This is a super ball. To get the ratios right, the exits have to look like something like this, right? Now, this bottom ticket is going to have the best ratio. So if you stagger them in, this is still a damn good ratio here. But you see how complicated it gets. You could also have where you're going to enter, and this changes everything. There's so many styles of entry to this press a button and drop a limit. And I think, well, I suppose the thing is to know when to do that. Now, this drift down limit fill, since this took like not over an hour, maybe the 1 hour buy drop that you have out here has disappeared and it never filled, but the 2 hour did. This is why your 2 hour limit grids need to be wider and deeper. When you press a button on the two, now I'm going to break out my, I have a keyboard that's got it's got 8 by 8. And I'm going to start running that. It's a little more complicated because you have to tell yourself, what is the, let me see if I can find it here. This keyboard is as cheap as the other one. But I don't know how systematic people are about trading, but this is kind of like a blind entry. Or you could have a robot, hopefully, launched. Now, the perfect world, the robot throws limit grids in just routinely on the clock. Now, that's an interesting robot. That's just a task bot. In my opinion, you should be able to have a... I don't know how to write an EA, and I sure wish I could, because my EA would be something like this. Every hour, drop this fucking script. Just do that. Fuck anything else. Fuck the ATR. Fuck the moving average. Fuck your wife. Fuck it. So, that would be interesting. Because as the market's moving, it's front running by X time. Now, I guess that's a robot, but the cruder the robot, the better. Like simple task. Something you don't want to keep, and I've trusted me. I've done so many fucking demos where I've done that. Like, I'm going to hit this script, but I forgot to hit it, or I'm like, oh, fuck, or hitting a button's work, right? Hitting a button is work. I guess in the modern world of being spoiled, playing guitar's work, but it's instant feedback enjoyment. You strum it and you're like, oh man, this is beautiful. This is beautiful. Trading, I guess I get a kick out of the brinksmanship of placing orders. So the anger side of my trading really comes through here, and throwing in limit grids. Now, it's easy to blow up an account if you. I don't think it is with the custom. So I'm going to focus this week on hitting buttons, writing custom scripts for scenarios, and say, okay, I'm dropping a 15-minute script, an elaborate script, and I'm maybe 8 tickets come in, but the name of the script has to be what it's going to do, and that's going to take up a little real estate here. So the mode that I pick is, say, what's the most important criteria, in my opinion, is how long does it last? So you could have, and this is another bottomless pit, unfortunately. You could have you create a new folder here that says just M15. So everything you press here lasts for 15 minutes, and then you know, okay, I'm going down crazy highway, right? I'm going to put in some elaborate where it just buys, but the focus is on logarithmic entry. for me. Because if I get in, say on sell limits, and it looks like this, sell limit, sell limit, sell limit, sell limit, sell limit, and then a hard stop. Because, or hard-ish. Because to me, that's the ultimate. When this market crashes here, a flash crash, the entry here would be, okay, it's when you press the button, the script's going to say 10 to you press the button when we're here. So the script says minus 10 minus and this is where it gets, you can really get very creative because you can have 5 decimals, so you can round it off. And I guess in the spreadsheet thing I did, you can create very seriously complicated and even staggered custom stuff. So you could have you buy one there, you buy one here, you buy one here, and maybe you buy one here. And here you have, and you kind of want to go with a master stop on that, but it's 15 or master-ish, because in your stop, I'm just going to do a stop in red. So you got a stop here and a stop here. Now, because you've put in this sandwich entry, you may have and see, this is more martingale buying. You're buying here, buying here, buying here, and maybe you're even buying just a little bit like dense, and you're getting more of this logarithmic Fibonacci-esque. The whole point of Fibonacci is that you have a 50 level, and then you have a 618, and then if you do the Fibonacci extensions, it's going to be 1618 and 2618, which means you're going to lay in all those and say you have a Fibonacci script. The fun comes when you say, I'm just going to come over here and I'm going to throw in a now we're playing back the market now, so you kind of have to gauge the next session to come up, say. Well, would you lay in an 8-hour grid, presupposing there's enough money in the account to play that strategy out? Coming into Asia, would you throw in every 10 pips you're going to buy on limits, or maybe every 13 pips? And you have that, it's custom done, you know how much it costs, you press the button. And since it lasts for 8 hours, you got to be careful you don't just keep pressing that button. And say and in Asia, the market's quiet, so you don't want to keep hitting that same custom hard-written script. Now, you may want to pepper it, and there's nothing wrong with this. You have a hard-written scripts you throw out first. The stuff you know always works. Can't go wrong with selling high, can't go wrong with buying low. And if I put in a sell limit here the last 15 minutes, so the elaborate celery 5 pips for 15 minutes right now, hit a button. So it throws them up here. Now they're going to expire, and you can watch the market play back and say, you know what, I didn't even fill the top of that. This candle has to go rocketing through that, because when this candle completes, whatever hasn't filled will never fill, they disappear. But the sell limits that are interwoven, and if anybody does know how to write a script that you can have different time frames on the same script, that would be the ultimate. If you can tell the code in that script, okay, you're done with that portion of the script. I don't know how to put in the code to say break. Okay. Say break, wait, throw in these other limits, and have a completely other task in that script. There's probably a way to do it. Maybe there's not. That'd be the ultimate. Because the problem is, you have a 2-hour script, unless you drop it at the exact fucking same time, if the market's really screaming up there, then it's not going to pepper The 1 hour or the half hour script would be your next increment. So we had no fill here. Now we could go into hedge mode. Right now, after that big move, if you didn't sell that because it went up hard and you think you're in a downtrend, so you either sold this. So let's imagine that we're watching the market playback and we don't know what's going to happen next, and we really don't want to cheat. We want to pick random samples of the market with this critical thing as the pip grid. So we're going to write to the scenarios that are possible. Every scenario, really. We don't have to run limits. We can trade at the market and be very good scalpers and stalkers and all that nonsense. But we can also see when it's appropriate to say put on a hedge. Now I'm going to go with the green for the hedge. There's as soon as the completion of this candle, I have a buy stop and I have a sell stop. Just on the head of that, and then this one hit another hedge. But since the market is at a different place and they're hard-coded, it may be slightly different stop. Now, if this stop lasts for 15 minutes, maybe it didn't fill because the market never really took off. But if it lasts for a half an hour, so there's a half-hour hedge. So at the top here, I have and I put this in the link at the bottom of the video. It's the link to the Hightail site, and there's a script. It says scripts, and this is from today's date, 10/27/2017. So it's the script that would run. All you have to do is hit a button. It's literally going to bracket the market. And this is what the ATR bot's supposed to do. And I realized some guys said it was crashing. That's because the data that I used to test it, that I got great performance on, something about that broker's data made it win. Now, I did run it on another broker and it lost. And I'm not sure if the data sucks. And I'm not sure what's going on there. But I know conceptually that tight stops and good ratios, when the market's trapped in a 5 pip range and you have a 5 pip hedge you can put on. Now, this is a 1 hour hedge that has a 6 pip stop and 12, but it does not describe here whether or not it's putting buy stops 2, 3, 4 pips away. Now, if it lasts for a whole fucking hour, 2 hours, when you hit the button here, in fact, when the market goes sideways here, I would put on a long-term hedge. Also, when you hit that button, it can put in you can put in a 4K, but you want to go symmetrical. If you don't know where the market's going, like here, you're putting on a symmetrical hedge. But it has to fucking get out. Like, if it's in a 5 pip range, it has to take 5 pips off the table immediately to pay for the fact it may kick back and whiplash you. And the filter here, now these are 8 pip. And if you don't want to, but see how you got filled by default on the short side here? You don't have to know where the market's going to make money. You just decided to get in when things are quieting down. Now here you just put on a hedge. In fact, here you definitely put on a hedge, but the exits would have to be terraced out. That's why you would need a true ATR bot. I still can't figure out how to write the code to just tell a fucking robot when he sees a 5 pip wick, bracket that with a buy and sell stop. And not only that, have a buy stop 1 pip away and 1 2 pips away, and the exits are going to be cashing out 3 and 8 pips away. So as he bursts out of that, he's cashing out. Now, right now, you could hit a button that literally, I say literally, now you go to your platform, you hit the 30 minute, the 15, and the 1 hour, and you walk away. Nothing you do is going to change that. That's what I also learned from Andrew Cardwell, is nothing you do is going to change the outcome of that trade. Now, it's hard to believe, and you may want to trade at the market, but if you don't want to be the decider, you don't want to be from the Bush family, you're just gonna let this thing do it. That's another thing to think about, is you don't want to think about it. And this mechanical trading really is what I'm doing. Now, I'd say the limit trading is not mechanical trading. Mechanical trading to me is low ATR, put on a hedge. Now this had to make 10 pips, at least that script. And if you're watching it happen, you'll know when to dump it. You'll say, you know what, it's done. And maybe you have a sell limit up here that never filled, but if you're, let's say the hedge made some money. You don't always have to be in the market. If this hedge just made money because this breakout happened to work. Now, you're going to get trapped in here if you don't take, like I said, if you don't take 5 pips off the table on something that you put on here. Say there was 2 stops that got filled, but 1 cashed out or almost cashed out. So here's where you're going to have to think about it. Should I trade this without a hedge? Should I build a hedge button by button? Hard-coded script, I'm going to put a buy stop here. I just got filled on a sell stop. So if you don't want to do a blind hedge, but if you're really not, you could blend them. Now, when you start to really get super tight, good ratios, you are going to get stopped out. You're talking about, this is a 5 pip grid, so in here is how many levels of stop do I have available in a 5 pip grid? I have 50, right? Somebody, I don't know if anybody knows the math. Do I have 50 pip stop? If every pip at, so since this is 5 pips from here to here, inside of every pip, I've got 10 pips, right? Imagine, now I did it on a spreadsheet, and it's 50, it's hard to believe, but so you could have a logarithmic thing where it's literally, again, it's literally a half a pip away. So you have a quarter pip away, a half pip away, a whole pip away, 2 pips away, 3 pips away. So you really have this severe compression, because if you're going to trade a standard lot, why aren't you getting in like this, 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 and you're just fine-tuned up on that. And the stop is 1/10 of a pip away. So within 1 pip, you have 10 tickets. Now, maybe that's slicing it too thin, but it is true that the market will come down. And look at it come really super close here. Now, I haven't figured out how to create a hand place drop that does that. Now, that would be the next project. Limit grids that are really written like that. 3 pips away, 2 pips away, now 1 pip away, now half a pip away. And maybe go as far as to say, this is 2/10 of a pip gap, now 4/10, now 6, now a whole pip, now 2 pip, now 3 pip. Or even go as far as to say that you could hard code this. You're getting in here, then 2/10 of a pip, 3/10, and you could do Fibonacci. But the hard code's going to look like this. You're not going to buy 10 pips deep. 10 pips deep looks like this. You're going to buy 10 deep. Now you're going to buy 98 deep. And in the hard code, it's going to minus. Minus. Now you can space this Fibonacci S. So you have 2 pip gap, now a 3. And I've done this. Then a 5, then an 8, then a 13, then a 21. So summation gaps. 34, 21. The Fibonacci summation series looks logarithmic. So you get down to that. But what you have to do is take the math here, find out which Fibonacci compression you want to use. at 90, so if this is 2, this needs to be 3 away. So now you're 5. Now you got to be 5 away. You're at 90. So you're 90 pips deep. I'm sorry, you're 9 pips deep. Now you're 95. Now you're 98. And now you're 10 pips deep. You press a button, and it literally gets in like that because that's a 4K in a 1 pip range. You're buying a 4K in a 1 pip range here. So you don't have to be that extreme. But if you imagine getting in, and this is also on stops and exits, don't forget. Let's say you have a hard stop hedge. Sounds good, a hard stop hedge. They're pretty complicated and actually very profitable from the standpoint of scaling, another very, very safe and scaling out. So I think I'm going to take some of these and write it. I only have to hit the button once to have a terraced. I could actually have a terraced entrance to the market too. So it's going to buy, there's a buy stop pending here, and every 1/10 of a pip there's a stop. And the exits, the take profits, are going to be very fine-tuned like this. And even with a bad spread of 2 pips, it's going to make a difference in the final metrics. And the cash out for the explosion out of just a buy stop only. Now, sell stops are here. You're either going to write a hard stop entry, and it's going to tear us out at just a little bit. Because you're going to have to, maybe you're going to take your first profit at 4 pips away. So the spread's 2. You're going to only make 2 pips on that first exit. But then you're going to actually scale them out so that you're taking something off there, you're taking it off here, and now you're going to do a compression exit. Just like the way you get in. If you're going to come in on limits where you buy here, you buy here, you buy here, here, you're going to exit that way too. You get out of the market if it's even on the breakout strategy. It gets out here, it gets out here, it gets out here, it gets out here. So you're going to commingle that exit like a compression exit hard, where it's replicating a climax move. So you get out, you get out, you get out, you get out. And you're also going to have the other version where it gets out and it leaves something behind because you don't know which one. And if you interweave those, you have to keep track of the logarithmics, the way that the style of exit. Because if you commingle another exit that gets out interwoven in there, that is the early exit with the late exit hard. So if the green is, so right now, let's say you just got filled on a buy stop because you're going to put a buy stop in because you have a price vacuum, you've come down, and it's more likely, it's this like to say, if you don't know, you would put in bracketed here, buy and sell. So let's imagine we don't know what's going to happen, and we don't. So we have small range. We put a buy stop, and also let's imagine we have that highly detailed. We're using that 1/10 of a pip the broker's letting us use. So it makes a difference because when this explodes out, you can take off an 8K that it's going to exit, and you also have the other one that's going to exit in the, okay, let's get something off of the gate and let's go for the long exits. But if these are interwoven, so there's no duplication in the exit, but one of them gets out really intensely and one gets out delayed, so it gets out hard on the top. Now, you kind of figure, well, it looks like we're going for a big explosion, or I'm not sure. I definitely want to get out early and let the have a lingering order. But if I think there's going to be some serious drama, I'm going to run this one because I want to get out in this kind of exits fashion. So hard entry and kind of a climax exit, I guess you'd call it, style. And of course, you could call it climax exit. And I would write the script to say, okay, buy stop entry or buy stop climax. Because you know you're going to get a buy stop, and it's going to say a 30 pip climax, and you have a 40 pip climax, and they're all commingled in there. So since you don't have to trade a standard lot anymore, you can run all these kind of fancy things. So here you would have, maybe you have I'll just take a lot off the table right here in this 5 pip window, and there's the late exits. And then you think a big move's coming. Either side here, you're going to have that, well, it's going to get out here, and then it's going to get out in the climax exit. Call it climax exit or CEs or something. And come up with your own. But we know for certain right now, for the last hour, we've been dicking around here. Now I would run the 4 hour, the 2 hour, the 3 hour hedges. I'd start building a hedge here. I'm not going to go sideways forever. And if I wanted to speculate on where we're going to go, I could put more buys in, say. But just in case I'm wrong, which I could be very wrong on a consolidation, because we don't know. When this thing goes screaming up, I know that happened. We know that happened, and we know, look out. We could keep going because we have momentum for a moment. But what if it's just one of these things? And there should be a trade plan for every bar and every series of bars. So we right now we got a hedge going. And we're coming into, the longer this hedge goes, the more we want to run the climax scripts that have like maybe an elaborate thing up to here. And based on the latest, the last kind of what the market's capable of, and maybe it doesn't realize the whole profit, but you definitely want to get the fuck out when it comes up into here. Now this is the round number, and anything on the way to that. But I think diversification in exit, diversification in entry is the key, the trick. That's going to be really what makes it a balanced, robust system, because you're not relying on this stupid ass, well, I'm going to buy here, I'm going to get in here, we'll stop here, and I'm going to try to get out here. Now, there's nothing wrong with that, right? Because this is like, the sellers are coming in here, and you're just going to run a goober stop. But you could not just, how could you make a living like this? You really need to have, okay, I just got trapped long here possibly. I've got this. I got stops here. I've got this whole area here with all this stuff going on. Because if you're okay with having these orders, and I don't see why you wouldn't, because this is only like a 5K. And if the 30-minute buy stops and 30-minute sell stops have disappeared, and you're only getting picked up on the 4 hours now, or the 1 hours, or the 3 hours, you're only committed to that now. But really good ratios. And because you have a 5 decimal broker, you can make very odd harmonic stops. You can go with some bizarre ass numbers on that. And so that makes the difference, because then you can have them a linear exit. You could also have a linear exit where it's literally getting out here. No contour, no logarithmicness. So imagine you have a linear exit, hard entrance on the buy, and on this buy you've got a stop. So you have a hard stop, and for all these tickets, because or it's hardish. Maybe you give a little bit breathing room, or maybe you do have something like, okay, this stop is connected to this top ticket, and the ratios are still pretty decent. If you're getting in here, if this is your exit point, entrance point, and all this stuff's going on, and you could be a non-directional trader like that because you could also have the sell limits. So you're long, say here, and now you're throwing in, say, sell limits up here that last. If you don't go past an hour on your limits or 4 hours, but you'd have to know this going in. It's part of your trade plan or part of your. And in the 8-hour grids, if you hit a button that says sell for the next 12 hours, it's not going to be every pip for 12 hours. They'll blow up your account. And that's how I blew up that account. Because I just laid 8 hour. I tell everybody these are 8-hour grid limits. I mean, I'm not going to spend time with fake money. I would never put in every pip, 10 pips like that for 8 fucking hours. Now, I might do it for 2 hours, but why would I spend time dropping? You got to think about how much work that is. Every 2 hours, you're going to come back and decide, I'm putting this grid here, putting that grid. I mean, stuff's never going to fill your hand. You only have so many motions left in your hand, and I'm using a mouse ball because mice don't work for me. But I've thought extensively about all this elaborate trading. Now, I love the hard-coded world. Now, the hand-placed stuff is going to be pure structured, but not to say you can't double up on the structures. But this is kind of like see a window of places to put in. I think the hand-placed stuff is going to last longer. Like if I put a sell limit up here, I go 12 hours on a sell limit, hand-placed sell limit up here. There's no button for that. I'd say keep the hand-placed limits because the stops, you really want your stops to be X away from current price when you hit that button. And that you're really having to babysit for stop entry because you're trying to bracket a condition, a situation, a setup. When the market goes sideways, it's setting up for some drama. Now here it broke out to the upside. And hopefully you didn't get trapped on anything. If it's a good hedge, you will not get filled too heavily or at all. You won't get filled at all, or even there's nothing wrong with having a sell stop 3 pips away from current price and a buy stop 3 pips away from current price. But you got to see that there's got to be an exit. You got to be getting out of something here because this may just be some Weasley trap garbage. Also, you may want to consider putting on a market hedge with very tight ratios in here. And that broke out one leg. You lost one leg with a tight ratio, but you took something off the table. So you could actually have it where you press a button, it puts on a market hedge, and it has a stop hedge. It's just endless. And if that's how you trade, you could automate your trading into one script. I always do this all the time. I always put a buy stop. I always buy one at the market. I always put a buy limit, and I always have I'm going to risk X. And each of these have their own exits. Or it's going to buy 2 at the market, 2 on a stop, 2 pips away, buy limit half pips away. Quarter pips away. So there's 4 tickets in a 1 pip range. There's 4 stops in a 1 pip range. It's just unbelievable, right? And if you're watching this happen, you would say, oh, okay, I'm up. Or it's already, if it's really well-written script, it's already cashed out. It's already taken half of the position off, at least half of the position or more. Because there's nothing wrong with they say, let your profits run. Well, this is the 15-minute chart. I should really be doing this on the 1-hour chart. A more realistic view of reality. Maybe a half hour. Let's imagine a half-hour trade plan. Let's rehearse a lot less chop, a lot less higher quality trades, as I say. So let me restart. I can't switch time frames during playback. We'll restart the robot. This is just the moving average robot that came with the system. I'm going to go to the half-hour chart. So rehearse the half-hour chart or build trade plans for this half-hour chart. Just think about how you want to hard code. Ideally, you want to have this thing where you just press a button. You don't even think. You don't, like Mark Douglas says, you don't even think. It's like artwork. If you're thinking about what you're doing, you're gonna try, and then if you try, you're just gonna blow yourself up with frustration. So half-hour world. Here we can see buy stops. Obviously, a lot easier to trade the half-hour chart. So it's low time frame madness, I call it, is a little ridiculous. Very tight, and even on the hedge, we got a little trapped here, but we made up for it. If we kept hitting that button every half hour, now we can see here easily, this is 1 hour script. We have trailing buy stops. If we perceive a vacuum, we're just naturally going to run, and they evaporate, say the every half hour, 1 hour. Now we don't want to drop a 1 hour buy stop here, because when the market comes here, it's going to fill that and trap. We want to hug if we can make it to the platform every half hour, we want to keep, and it's going to be a automatic cancel replace if it's a half hour and a 15. If you hit a button for the 15, the half hour, and as we tighten up in here, you are going to launch those, but on a big bar, you never want to put a buy stop or a sell stop on a big bar. Like, no, you wouldn't put a buy stop here and a sell stop here. You would do it on this bar. This is your opportunity to hedge, to get in on something. And here you can see that as we crater this vacuum, you've got stacking up there. Not to say you can't have the same thing going in here with sell stop, but notice how no fill. No ticky, no washy on that bottom one. And the beauty is that if these are 2 hour, if you're putting on the 2 hour and 3 hour hedge, and here I would put on the 2 and 3 hour and 4 hour hedge. The longer this thing goes sideways, the bigger the reaction out of this. The longer this goes sideways, now this is a broader criterion. You're going to have to risk more here, and maybe you do have a button to press for the, say, 8 pip bar. Here, this may look like a bad trade, like I'm getting trapped, but it resolves with a 10 pip here, and then it comes back here, and you're not just going to be breakout trading now. You're going to have buy limits here. So you couldn't have run any strategy other than buy limits here, because the ATRs don't allow that. You're going to have to pull the trigger at the market on the half hour when it smacks down like that. And here you can't even tell if this even retested to do one of those. When you see a hard move up, you're selling at the market. So you have you have 3 trade plans. Market order. You have your sell limits here. You're getting filled on the trap. I got to get rid of this. I don't need to. Oh shit! I don't need to see that. So there should be a thing you can do here. Now, the 1 hour chart's going to be the best. It's going to give you a better picture. So let me play back the 1 hour chart, and then I'm going to have to go get some food. But look at the 1 hour playbacks. Now, a lot less thinking there too. 1 hour chart is probably going to be, you could have a whole 1 hour strategy where literally sit there and just fucking go. 1 hour says throw in X stop. And you have the structured trades, and you have where I started talking about these capture grids that are very fine-tuned and very complex, because it does matter where you get in. And if it's going to fill, you'd be surprised how it doesn't fill that whole thing. And you have to do the math on that. Otherwise, you're going to overtrade it. It's going to be too much. So let's look at the 4 hour chart. Sucks because it's not, there's the Goldilocks factor. It could be too snug, too wide. So let's look at the same data set. And I'm going to play it back faster now and rehearse the, we'll speed this up to beyond reality. So it'll look like this. Now I had to speed it up even more because 1 hour chart, it looks dead in the water here. So I'm going to go for hyperspeed, which is not that fast. Apparently my grid's taking up some processing, so we're not getting the... that's pretty fast. Okay, so we can't put any hedges on now. It's too violent. But we are running buy limits in front of the market now. And there's a 15-minute buy limit look like this. And we have the 1 hour buy limit looks like this, say, or the half hour. And the 1 hour buy limit looks like this. There's just one ticket. Ideally, that's what it looks like. So we got filled on this 15, and you didn't see it for a second there. It went up. We either scalped out of that, but where's the stop for that? Is the stop here interwoven into this? Is the take profit greedy? We may never see the take profit. It's okay to realize that we're going to keep tanking. If you're watching it happen, now we're actually going after another limit. So when this bar complete, this is a 1 hour chart, so I forgot. 1 hour chart. Here's the 1 hour limit. So this could fill, but it's also going to fill. It's not going to fill these 15 minutes because we know 15 minutes has probably gone by now, and it's not filling those orders. This is that initial plunge. Okay, so see this scenario here? See that plunge? That's the 1 hour. Now, what's funny is that I'm sneezing. It's killing me. This is the Super Bowl trade I was talking about before. Now, if you really loaded up on this, now imagine you perceive this coming. You could put an 8 hour limit grid in here, but you almost want to do it by hand. This is where it's a work. If you put it in such a way that you have unique stops on that. If you press a button that you know is going to start buying, say, this deep, and it just comes in here with a 5K, and that lasts, of course, this is actually something you would launch here, realizing that this hole exists, because you wouldn't put it back here. This is 2 days before the event. But we are all aware of the fact that there's this hole here. What do we do about it? I say put limit grids in. My view of that is, without a doubt, it's completely logical, and it just makes more sense than kind of like anything I can think of. I just can't imagine why this isn't painfully obvious. Now, the diversification of exits, if you let that scenario play out, this is what I was talking about one night. I put in a limit grid like that, and I didn't really let it play out to fruition, which would have been Super Bowl, where the market comes down here and it comes all the way to here. Like I just got out here at the floor. There's nothing wrong with that. And look how that filled, right? Picked up these buy limits, cashed out, and we even saw a retest there watching the 1 hour playback. Now look at this thing. If I never got out of this thing, it might take this out, and we're still cashing out. Now coming back the other way, I'm going to throw sell limits in here for the next hour on the top side there. So that happened today in the trade room. You could see the top, like you literally have these limits. Now they last for different amounts. You have 15 minutes, you have 1 hour sell limits up in here. Inside there's going to be cash outs where maybe this top one gets out here, they get out here, they get out here. You're going to have to watch that unfold, but the nice thing about it is you don't have to pull the trigger. There's no pulling the trigger at the market, no Sniperville. You can also put the hand-placed orders up on the top, the tree tops here, focused orders here, and the piggish, I don't give a fuck, settlements. But you can't go pure settlements like that, and you're still going to have to pay attention to the hourly true range. So every hour you check the market. I actually didn't sleep the other night, and I was every 3 hours I wake up and look at the market. I don't really sleep, I don't think. Too good. So I put those, and I'm looking at it, hey, what's going on, and just constantly fascinated with, it's like there's like a party going on. A market, there's a party going on, and it's fascinating. Here, you would have definitely put in settlements, but that first ticket has to be a scalpel. What if this is a real breakout? You are fucked. That's when these settlements come in handy. So if they blow you out of this precision, like you think you're a genius, you're going to sell here, it's going to go and do one of these empowered trading moves, that may not happen. See, that's why I would never bet on that bullshit. Oh, we're going to get in here. What if they just crush that? You need to have something to come back the other way. Also, what if that last bar, I didn't get a good look at it, was a low true range? You're running breakout strategy, and certainly on the 15.5 hour, you could have maybe put in a breakout strategy here. Maybe your breakout scripts are green. Okay, you're long. Plus, you perceive this. Oh, it's a real breakout. If you look at the smaller time frame, if you only trade one instrument, you can do this. You can do. Now you're selling on limits, maybe, but maybe they're this wide. The long-term sell limits need to be spaced wider apart, because you're gonna. That's a set it and forget it trade. I have no fear in placing buy limits 20 pips apart that last hours, with like I said, a softish stop. The stop is like this. They're connected to these guys, and this could vary how they're connected. I mean, in the sense of first in and first. So this stop would be connected to this one, and maybe this stop is connected, since it's higher, to keep the ratios better. It's connected to this one. That's the normal thought, is that the ratios are right. So this guy is connected to the bottom, and as they go slightly higher, they're connected to this slightly higher, the stop. So it's at least a slightly better ratio. This is very dramatic grid, but the exits have to be this guy is going. And of course, you can have a bad ratio in that top ticket. The other exit I used to write was, I think I still got the script somewhere. Since the stop for this guy is down at the very bottom of that bank, he's going to get out, say, here with a good ratio. This guy gets out here, and this guy's going to have to get out. For the ratio to be really good, he's going to have to get out like this. So it's going to be very unique looking 3K. And that's just 3K. Okay, so we're making money on this, and we have a hand-placed order here. Hand precision here, but we can't guarantee that that's going to happen. We have to have the staggered. Okay, I'm gonna get in here also in a high resolution capture mode. But we have that beautiful precision, and of course, maybe you have 3 tickets up here, but it's a lot of work to find those areas to put those orders in. Now we have the buy limit sitting at previous top become a bottom. Maybe that's a hand placed one. So a couple of hand places, and then we have the we don't want to buy this plunge here because it's really not filling a vacuum. So there's no reason to put limits, say, in that pullback. You kind of want to have that thing cash out. And this is you can make mistakes. You can't just throw in orders willy-nilly. You don't want to buy. So I did this today. That was a bad move. What I did was I threw limit grids in because I was just jamming. I was just dicking around. I threw in limit grids. I don't buy that pullback, but I think it kept crushing back. You want to have these top tick Tommies play out into the fair value. Now when it comes back here, you have buy limits here, but you don't buy in that pullback. You buy on these kind of pullbacks where you're like, oh, that's swing city, man. They're going to come in there. I'm going to go for the wide grid. You got to know what every button press costs you too. Here you might see this happen and buy at the market, and if you have a button you press and it gets in, this is a 1 hour chart, so this is not a lot of you're not going to overtrade this chart. You shouldn't. Small ATRs. So you hit a button for the breakout bot, and maybe you don't get filled on South Side Johnny, you get filled on North Side Sam, and you're long on breakout strategy, plus you pulled the trigger at the market, plus it came back to your limit. Do you have a triple threat entry? And I'm using just whatever color I'm using, I guess, here. I think we all know what I'm saying, buy and sell, right? This would be a buy limit. Just using blue for buys, grid trying to, in case you're like 5 years old watching me. In here, there's no, like, so this breakout strategy just made some kind of money. And now you're going to come in with the buy limits, right? It's painfully obvious. We have a vacuum. We're doing buy limit strategies. The shorter the term, the closer they are. 15 minutes are in here like this. You got the broader 30 minutes. The 1 hours are maybe only sliced like this. And you can be very elaborate. You can say, well, this is the, you could say something like, this is the 1 hour. Here is a 2 hour, a 3 hour, a 4 hour. And literally, it's just a simple strategy. I mean, a simple ticket. There's a stop here. It makes this. There's a stop here for this guy. He makes this. And the account will go flat. If it crushes down in, it's going to take these out, and you'll never be more than 1K at a time. Now, that would be a first in, first out script because they're going to blow you out. So, okay, I think I figured it out. You cannot do a master stop. I don't think you can do a master stop in the United States. You'd have to have your scripts written for first in, first out, which means if I buy here on a limit, this is the stop, and this is the take profit. The next ticket on that hard written script has to be buy here, stop, take profit. You have to cash out of this. When the market goes flat, you are in no position here. So when the market goes smashing down, one of these guys is going to catch. Now, I guess you can't just go hitting the button like a madman. Now here, if you have any clue of what's going on here, that this is a major pivot area, you kind of missed your entry here, and there's really no trade there if your criteria for ATR breakout is a very narrow range, and this is where you go into Asia and you do put on a monster hedge and you just go to sleep. It may be hard to accept the fact that this is the biggest winning trade you're ever going to have because you literally made 50 pips and almost 100, but you're getting in on the breakout and you got the limits coming in. Cashing out, you actually have money on the way to your limit grid. Of course, I'm basing it off of, you didn't have to drop it back here, but I'm saying this vacuum has been forming for quite some time, not to mention this vacuum. And you can see the other smaller, tighter limit grids would have filled here and maybe cashed out, and but hopefully you're short into that. Like you've padded your account with money because you got in when you needed to get in based on this low ATR. So you're short into the limits. Maybe not the best bounce in the world, and maybe you don't even trade that. Maybe you do, like you know that the hand place limits that you put in this undercut area here is going to be where they're going to come trap, rape, come back to the top. A some amount of limits you always have to have above you, and some amount of limits you always have to have running below you. You could hand place a limit at this, but you know that this is an uptrend now. You can maybe only scalp back to this, and you got to be out. there's a balance between over trading and under trading would be never putting anything. And maybe all you do is run sell limits tonight up here and buy limits below here. So you can already see where the market's telling you, hey, come on and put some orders in me because I have a hole above me. So you have a hand placed sell limit here, and now you're going to pepper this whole area up here. It's just a nice feeling to know that while you're sleeping, you've got the 2 hour, the 4 hour, the 6, the 8 hour overlapped here, hopefully at different prices, sitting above you. So if they do spike it up, you know, the way the market behaves typically is that, you know, we knew that there was this hole here, right? And we knew there was maybe news coming out or whatever have you, and I think this is London, maybe tumbled down, and then we're really looking for the engulf scenario here. So we have limit grids here laid in, and you probably maybe going to run this on your swing broker. And it totally engulfs, right? It takes out the high of the day, makes a new low, takes out 2 days ago, crushes in, fills, rips back, total engulf to here. Then the scalpers retreat, which is good for at least. That was a nice 10 pip move, 8 pips. And now we get to back to kind of fair value starting gate shit. Now, so here we just filled. We went to sleep. We're actually cashing out of that right now. It's this whole yin and yang stuff. There's not a lot of places to put a hedge on. You'll notice there's not a lot of quiet bars. Here's a non-directional join the party. This is actually, I really like this script here. I can see low AT, the criteria has been met for a hedge. Low ATRs put on a hedge. We don't have to know where the market's going. We're in a 10 pip window. And it makes money on the downside, amazingly. It never fills on the upside. And it could have been a since you're buying on limits here. And maybe your limits are filling and you're getting crushed, but you're over. On top of that, that's like I said in the beginning of the video, you can trade both people's trade plan. You can be a seller. So I did that today. Because when that guy in the chat room says, I don't get it. When are you going to start selling? Like, you can't just have one direction trade plan. So, but I usually write the buy limit side. Plus, I love the buy, and I write the buy stop side and the buy the market tickets. So I definitely make more money if I have sell plans, buy plans, hedge plans, market plans, limit plans, all this stuff. If I'm only trading one instrument, I have the ability to strum it, pluck it, violin bow it. You know, you have to think different technique, different tactics. Look at this nice, beautiful trend trade. Here you can obviously see the top, bottom structures. You got all the time in the world to see this bullshit. Right at the round number. Top become a bottom, pull back here. This is where you are trading at the market. You are trading with limits. You're thinking about these entries. Here, you never come back. And you're getting filled on sell limits as you sleep right now. Amazing sideways action. This is a no-brainer hedge. Now, you may freak out when they come back up here, but if you've got stops that are, like I say, high-res stops that are quarter pips apart. Think about it, right? Here's obviously, you don't have to know where the market's going. You know it's getting quiet. You may perceive an entry, and here's your limit entry. You're long. You really don't get filled on too much. Like I said, it's not going to be there's no hard entries. In a high-res system like this, there's no hard entries. You have to wait for that to come back here, and hopefully you got some scalps built into the top of that. It's still going up. And you're actually buying this. You're buying with the sell limits existing because you don't know what's going to happen. You really don't know. Good ratios. You know, the name of the script is, say, 50 pip vacuum. Whatever, you know, sell the way I write them is cell, and the first number is the start point. So if it's cell 20 to 50, it's going to be, the market's trading here. So we're going to trade, but inside here, I'm going to say how many K the script is. And I'm going to assume I could actually say, let's say log. I use logarithmic as that like Fibonacci compression. So if I say cell 20 to 50 log, I know internally 10K, that I kind of know what it looks like. It's going to be a compression cell. So it sells here, it sells here, it sells there. And that's the name of the script. And I, in my mind's eye, I know when I hit the button exactly what it's going to do, and I can see the grid and what I need to hit the button for that grid. And how long does it last? How long does it last? How big is the ticket? And what is the range of the entry? Now, the other thing you can put on there is it a soft stop? So I use SS. My old scripts, before I kind of just came up with the hotkey and I just kind of had default what I know, I put SS for soft stop and HS for hard stop. Log was compression, linear is every 5 pips. And I had one called Super Ball. And the Super Ball was when you buy on limits and you're looking for that. Not only is it going to just come back to like a classic scalp, is you buy this plunge. So you buy this plunge here, and instead of getting out in a Super Ball way, you're buying, buy, and you kind of have a hard stop, I suppose, but your exit is going to be this top ticket, or maybe here you have this bottom ticket gets out here. All the tickets, they get out by here. And the ratios are not great on some of these tickets, but it's designed to do the scalp. But the Super Ball has, the extended energy where it's full auction drama like this. And of course, this is in trend mode now. People are drawing channels on this. There's a way to trade that, and some people, they don't mind trading this. Now here you're running, you hit a button that has a 15-minute buy limit that runs a trailing. If you think you're in a trend, maybe it's a 1-hour buy limit that sits there, and it gets very kind of complicated very quickly. But if the name of the script is buy limit H1 3 to 10 13, that means to me it's going to buy from 3 to 10 13, 3 to 10 with a 13 pip stop. So the 13 pip hard stop, you could describe that. So I'll write the scripts this weekend with the title that should tell everybody what that script does. Now that would be, and you can have quite a bit of scripts and very nicely prepackaged scenarios. 3 hour, 2 hours. So you have the 2 hour and 3 hour version, and hopefully those are different. That's why I say if anybody knows how to make a script that I can launch, say, 10 tickets in time groups for their expiration, because that's going to be the ultimate. No duplication. So a lot of times if you start even dropping hand-placed grids, you'll see duplication. You never want a hotspot in your entry because you're defeating the whole purpose of getting in on microlots. Now, when a microlot script plays out in the scenario you expect, it's a wonderful thing. It's just beautiful. It's like writing the perfect script for the perfect movie. It's perfect fit. Now, there's generic scripts that work in all movies where that would work it's a comedy script. So if you think of the style of these algorithms or these templates or these matrices, they have a style and the way they would play out, the way they should play out. It looks like I chopped the screen off here. I just noticed because I had the expanded there, but it's all about this price action stuff. And of course, now the sell limits, you're sleeping now, the sell limits are filling. But I get a kick out of this shit. Now here you have a hand placed cell limit maybe, or it wouldn't matter really, because if you're going to do high res, this is 20K up here. Let this come back and cash out. Okay, you just cashed out to the floor. Maybe you do have one buy limit here, but you made something on counter trend trade just now. You were long into it. So I've done this in videos where I really am seriously trying to make money. Not just being ridiculous in a live room and just goofing around. Where you really think about everything. The next thing that could happen. Anything can happen, but there's only three things that happen. Sideways, up, or down. When it goes up, I want to sell. When it goes down, I want to buy. Want to sell too big? And how far away those tickets, and how big is that thing, and how long does it last? And that's going to matter. Now here, you wouldn't have made money unless this order lasted 4 hours, because it took 4 fucking hours to get up here in reverse. And once you get used to this kind of trading, you'll find trading to be quite entertaining. And that's not like, come and get me, bitch. So you really have kind of a very brinksmanship attitude when your buy limits start down here and you're like, okay, man. And so another trend buy here, it looks like. And look at here's another script for an idea. I had a script and I called it the name of the script is, 5, 10, 30. So that would mean I'm going to buy from 5 to, and it's called trend. So I call it trend buy. And I just call it trend buy. And it's going to buy from 5 to 10 pips deep on a limit with a very tight stop, looking to make 30 pips. It's a greedy trend script, but it's only going to be limits. Maybe it's called a 30-minute buy trend. I mean, it's very specific trade plans. And a lot of people trade like this. So, I mean, they actually trend trade. You're either going to pull the trigger at the market here because you perceive this is a pullback, buy at the market on the clock. But what if you said, I'll buy 1 at the market and 2 on limits, but really I'm going to put a tight stop on this, and my targets are going to be pretty damn greedy. Called buy trend, 30-minute buy trend. And maybe it doesn't buy at the market. Maybe literally, ultimately, it's a trailing buy limit, trend-based entry. And it could be a 3K that's 3/4 of a pip apart. Pretty tight stop, maybe even hard stop here, but the exits are greedy. So trend buy, trend sell, you perceive a trend. You think you're in a downtrend. Now, it wouldn't have filled here. It wouldn't have filled on any of your, if you were launching that script here, no fill, because it's never kicked back up into your, unless they were super tight. This is the 1 hour chart. And in here, you could have actually gotten filled. You can't really see it, because if every hour you kept hitting a sell limit, somebody talked about that today in the live room. What if you did that? Oh, there's, like I said, it's a bottomless pit of expression. Here it would have worked. And maybe it overfilled and crushed you out. So when the ATRs spike up and you do want to trade this from the long side and the market's getting violent, you may have a trend buy that says 5 to 15. And maybe you write 20 on there for the stop, but the way you describe it, you'd have to keep track of that. When I first came up with the names of the scripts, I kind of wanted it to be so everybody could understand it. And I could understand it when I looked at the name. Now, since this is in the hedge folder, I know these are hedge-orientated things. To write hedge here, you might want to write hedge on here too. But I tried to clean it up for this is for the tablet so that it saves real estate on the tablet. I get more chart. But that's kind of like a nuanced thing, because maybe you want a long name there. Because if you take these scripts and you take them out of this folder, you may not know what the fuck that is until you open it up. That actually makes no sense. It doesn't say whether it's a buy or sell. And if it doesn't say buy or sell, maybe you just assume it's a hedge. But unfortunately, I've written 50 different title styles, And so you can also get confused or hit the wrong button. But certainly the ultimate way to go is to have the name describe what's going on. Now, these hotkeys, the problem here is I'm always telling people, well, these are my sells, these are my buys. And so it's not good for sharing. And it's confusing if you don't even know if A1, you're like, well, A1 sounds better than A7. A1 sauce up here. But now these, I forgot even what this, I wrote this script and named it, and I forgot even, I know this is buy limit here. And so I continually open them up to look at them, and really the names and the comments on a lot of scripts I wrote, I didn't have time to go make the comments fit the exact thing. And then I got some scripts that I have from old stuff I got to go dig out from my other computer that has the elaborate name, and it's just very detailed stuff like Bigfoot. I had a script called Bigfoot, and the idea there was that it was really going to buy like insane down here for like a whole day, 8 hours, 4-hour Bigfoot. But it gets your mind primed for the fact that you are really going to get in heavy, and it's going to be like a foot where there's compression at the bottom. You could have the troll entry, a troll foot. But, I have to have a visual representation of that thing. Definitely making money on this counter trend trading. If it's commingled with really good ratios and high res things, we're just kind of making money from this bullshit up here. Now there's a vacuum forming here, and maybe we are going to, when the market calms down, it's time to think about putting on a hedge going into if you're going to go sleep and you're not sure where the market's going to go, it doesn't hurt to, if this market simmers down here, we could put on a hedge. So that's going to be that's what I'm thinking. Naturally here, we have to think about tomorrow putting in you hand place the first series of buy limits like this. And now how long this one's going to last, 8 hours. And what I didn't do in the video, because I'm not going to do what you're supposed to do because it's too much work on a demo. But this buy limit maybe lasts for 2 hours. This lasts for 3, 4, 6, 8. So the estimate time of arrival, you have long exposure here because so into the future, it's like this. These guys are sitting out here like this, and of course that bottom order. So imagine this guy lasts a long time. This guy lasts for just an hour. So you're constantly running that 1 hour. This is a 2 hour, 3 hour, 4 hour, 6 hour, and the big 8 hour. And you go to sleep. And so just like a bullfighter, this thing gets pulled out of the way and you're not going to overfill. This will also allow you to lay in the 12-hour orders, say here, if you're going to be gone for 12 hours. Because this is going to be a killer place to get in. And what you'll find is when you come back after being out at your day job or what have you, or you're watching it fill on your cell phone, that you're like, this is fucking beautiful. I got these guys in here for 6 hours. They're deep, 8 hours, and this is crushing down now. It's filling the 2 hour, but it's not going to, you have a complete, all the confidence of a goober that you, and it's probably not going to matter in the end that you place them exactly here. Like I said, this is the bid. It doesn't mean you're going to get, they may take it to the bid and just reverse. You ever seen them take the market right to the edge and reverse? And it just literally runs out of gas, and it really is true support there. Okay, so now it looks like we're going to walk down. If you stayed in these cells, this is why you need a separate account for a lot of this stuff. Because you need to let this whole scenario play out up here, where all these sell limits that you put in either by hand or they were just peppered up here for 12, 8 hours, they're starting to make money. they're finally making money, and maybe there's even a place to add to it on a hedge or a trend continuation thing, but you don't want to get carried away because when this vacuum fills back into this pivot, you got to be aware of the structure too. But there's nothing more fun than just throwing in a bunch of fucking orders like this and watching this thing retrace. Now, the spacing needs to fit. Can't get in super dense here. They crush you. So you're layering in these orders into the future. No doubt you're going to want to run buy limits here. How long do they last? And here, maybe you have trailing, maybe you perceive an uptrend here, so you have trailing buy stops. All on one instrument, very easy to manage, I think. It just couldn't be any easier. So you're really going to be in this world of this stuff here. You know, you got your buy limits here, but there's a vacuum on top, so trailing buy stops. You walk down, never a higher high. I watched that happen last night in the Euro. I thought, God, look how well behaved, never a higher high. Now your first stop entry fill, but you had your hedge cells that maybe they didn't get in here. So your hedge cells are sitting here, and maybe they didn't get in. And I fucked up my color. I don't know how I did that. But well, I got to get something to eat anyways. But that's basically what I'm looking at. And then, of course, we're coming into Asia here. So maybe you have a hedge on. Buy and sell. Look, start tanking. Let this guy play out. Start putting in the opposing team. And let this, looks like it's going to go down. It's in a downtrend, and there's a hole beneath us. There's a high probability it's going to fall in that hole. But anyways, that's my my story. I'm sticking to it, and yeah, it's just utterly fascinating. Somehow I'm locked out of this. I fucked up my tool here. I don't know what I did here. But anyways, looks like I can't get, I crashed the program there. Oh, I got 2 pens, I guess. So anyways, that's my presentation. And look, it's going up after all. So listen, let the market prove you right on the stop entries. The limits, always let the market prove you right. You don't have to trade at the market. If you're trading like stop entry and limits like this, you don't even really have to pull the trigger at the market. And that may be too much to ask, because this way it's letting the market do its thing. Because trading at the market, it's fun, but I don't know if that's really the way to go for the most part. I think most of your money is going to come from scenarios and stuff that happens over and over again. Maybe you would build a position at the market, or like I said, the market slams up real hard, sell at the market. You're definitely getting out at the market. When you cash out of all winnings, you can always cash out of everything. You can close all openings and pendings. If you think you've overdone your arrays of pendings, you can just get out of, or you can hand pluck them away. You can come in and say, I think I overloaded this part of the chart. If you're afraid, close order is a thing that you drag over to the current ticket. Pluck that away as the market's coming into that thing or something. You don't want to overfill that. So I hope that helps. It's definitely great to have a name for the script, and now you're primed for that scenario, and you can perceive when it's time to run that scenario. It'll become painfully obvious that when the market's going up and you don't want to get on the train, the only thing you can do is front run it with the opposing counter because it's probably going to continue going up. When it's going up like this, I wouldn't run buy limits beneath because you really, your broker will probably shut you down for putting fake orders in. Because it's going up, you're going to try to create this haystack absorption. So talk about price absorption. I was joking about that. Depth of market trading, the guy's saying, well, it's absorbing here. Well, you put in your absorption orders. And you capture that spike. And that's a great trade plan. And maybe I would say if you trade 20% of the market and the rest of the percentages are divided into stops and limits. Or maybe you do, 3 of each, 33% markets, 33%. But you don't want to overtrade at the market because you really must know where the market's going, unless you're putting on market hedges. And the stop entry, so you can directionally stop entry trade, directionally limit entry trade. You perceive the market's going up, and you're gonna run these limits out in front, which is probably the most fun in the world, because you're putting them in no man's land, which you're not supposed to do. And then there's the perception that, no, we're going up. Pull the trigger at the market or get filled on a stop. Definitely. Oh, okay, I'll say this about the market order. This is for people that can read the market on the fly. You're going to get a better fill and you run a tighter stop. The stop entry is saying, you know what? It's going to go a pip above. If it's only going to go a quarter pip above, it might as well be a market order hedge. But if you're going to put your buy stops and sell stops 3 pips away, because you really want to be certain, hey, but you're going to overpay for that. But it's going to be like a follow through. But you certainly don't want to be putting your buy stops and sell stops 10 pips away. I just would never do that. I'm not saying that wouldn't work in a violent market, but typically you want to get in before the market moves on something. The tighter you can run those, you're waiting for that really small 1 hour bar. So you had it down here, and hopefully you're letting this thing go up and you see, you had your hand play sell limit trade there. But you play back these, just go on a strategy tester. It doesn't matter that the EA sucks. Here it doesn't matter. You're doing it for scenarios. And pay attention to, so in a sense I'm back testing, but I'm actually forward testing. I'm saying see, they're filling my buy limits now. So and they're cashing out of my sell limits. So I'm holding winnings from that. The ultimate thing is wick to wick, right? So, and look how they just went. We just came back to fair value. So we cashed out both legs, or we're in a winning hedge we built right now, and we have the option to cash out, take the money, and run. And now we just went sideways. Probably in a half hour, you could have maybe put on a hedge there. You got to pay attention. You don't want to get trapped on a bullshit where you're buying. Like I say, you're never going to want to get in on a buy stop 5 pips away to make 3 pips or to make. The market really has to take off. The better trader's going to get in before the move. Now, so you could have sold there, and now you're getting filled on limits. And that's a 1 hour playback. We could go down for 3 more hours now. And this is where you're going to have a grid in front of you catching that. When the market really heats up and starts tanking like the euro did, you've got to start running very broad. Like if you could perceive how big that hole was, and it's about as big as the hole is here on this chart. But it was a daily hole, and you really had to say, you know what? You've got to look at the half-hour train and say, well, we're in a 5 pip range, put on a hedge. Maybe it is going to reverse, but what if it doesn't? What if I'm wrong? Or you're putting in sell stops all the time. Sell stop, just like in a marching up market. 2 pips, 3 pips away, buy stop, and just cascading that order. Just keep hitting that buy order button, or even sell at the market. But I say you don't want to get too much at the market because you do want that confirmation entry also blended in with different ratios. So that's the name of that tune. So this is nice and concise. The problem with doing live streaming is that you can't play the market back this fast, and you can't say all this stuff that you can think about and talk about. And this is going to happen guaranteed every day. We're going to whiplash up, whiplash down. But do you have trade plans that can capture that price action? You've laid in your stuff, you laid your trade blades in, you go, let her rip, baby, bring it. You got enough money in the account. You did the risk of ruin on each script. You wrote that math down, whatever have you. And the hand place drops. So I have everything in this platform. This is hard-coded, this hedge. These are hard-coded. When it says drop or limit drop, those are hand-placed. You have to pick it. Where your cursor goes is where the order goes. The hard-coded ones, I'd say, are very scenario-based, and that is going to be, you're not going to be able to hit. If you hit the wrong button there, you're screwed. When the single drops are safer because it's more work, but you're going to think about every order you place. And they're all going to have a reason. On the double-click hard-coded stop entries, that you're going to say, I'm going to be an ATR robot on this, and I don't know where it's going. Double-click that. So you have hedges, limits, market orders, and you can run pure hand-placed limits, single drop limits, double click hard coded stop hedges maybe, or directional stop hedges or stop entries, and double click market orders that have a precise, okay, the market's quiet, I can run a 5 pip stop to make 8 pips, double click. And double click it and wait till the market will move a little bit. Maybe it comes near your stop, hit another buy at the market. So build a position on market orders. That's how you would build a position, is with market orders. Or are you letting the market build a position for you as it sloshes around and picks up a few of your hedge stops? Or I guess you could say you're building a position as the market plunges into your limits, but I don't think that's not like building a position for a breakout and then dump, cash out. I think when you put in the limit grids, I guess you're building a swing trade in a way as it comes into them. But that's the fun of trading as far as I'm concerned, because there's nothing more satisfying than just putting orders in no man's land and seeing this thing unfold where it goes up. Now, you have to be aware of the fact that the price vacuum is the larger it is, the bigger spacing you need to put on your limits. Because you may only put 3 limits in a 100 pip range when you perceive a 200 pip vacuum. And then the next bank's deeper, longer lasting. So let them blow out that bank, or let them not even fill that bank because the market can't get there fast enough. So I've probably traded more than anybody I can even think of. Probably more than anybody in the world, probably. I hate to say that, but I have run demos with elaborate scenario scripts, and brokers have shut me down. And it's hilarious because you have a broker, a demo. I once traded the yen, 6 yen pairs, everything against the yen. And I loaded these things, I swear to God, all 6 pairs and traders away. Boom, boom, boom. I think I made a video about it. And I was cracking up, watching the market come into my stuff, and I really wasn't paying attention to the account. Didn't start off with a flat, fresh balance, and really, you'd have to be the person that is going to test this shit out and say, yeah, that works, and it does. People are making money, but you just cannot overload. You can't get in super heavy, just like anything else. You can't go to really heavy, right? You want to break your pelvis. So just because you're having sex doesn't mean that you should break somebody open, right? Okay, so that's not romantic. Okay, so we're gonna I'm gonna wrap this up and put the link to the scripts as they exist here. You can play around with it, but you know, drop and click at your own